Hi people, how are you? Hope so you are doing well. And in this video, we are going to discuss the situation where we can take the exemption from applying the complicated methods of the Ind AS 116 for the lease account. The first one is the short-term lease, and the second one is the low-value assets. So let's start with the first one, that is the short-term lease. So basically, the short-term lease is the lease period which is less than the 12 month. And if we talk about the practical life, the situation in which the lease contract is the less than 12 months, then we can consider it at the short-term lease, and we can take the exemption from the complicated rules of the Ind AS 116. And there are some important points that we need to keep in mind while evaluating the short-term lease. The first one is that we have to evaluate the short-term lease or the long-term lease as on the date of the commencement. Like if I give you an example, is that if we have entered into the lease contract that is for 3 years, but after few months we realized that no, we should make it for the 9 months, and we want to take the exemption, then this is not allowed. And the second important point is that while evaluating the short-term lease, we have to go assets by assets, not for the group of the assets, and we have to check the each contract for the each assets. Okay, I hope so you understood it. And the second situation is the low value assets. So basically there is no meaning that is defined under Ind AS 116, but there are the few conditions, like it should not be dependent on the other assets, and the lessee can take the benefit on its own without merging it with other assets. If these conditions are satisfied, we will consider it as the low value assets, and we can take the exemption from the provision of the Ind AS 116. Okay. So the example of the low value assets is given in the study material is mobile phone or the laptop, because they are not dependent on the others. And if we talk about the dependent assets, is that the car tire, because they are basically dependent on the whole car for the working. Okay, there are also few points that are given for the while we are evaluating the low value assets. The first point is that while we are entering into the in a lease contract for the old assets, like we are entering into the lease contract for a car that basically the new car price is 10 lakh, but after few years the car price is 5 lakh. Then what we have to do, we have to consider the price which is applicable for the new car while evaluating our accounting for the assets, not the price which is after depreciation or after using of the few years. And the second important point is that we have to go contract by contract while evaluating the low value assets. If we are entered into the a lease contract for the 200 laptops, then we have to consider the each laptop separate, and according to that we have to account for that. And the third important point is that there is the no as such nature of the business or the size of business that will affect the low value assets. So if we got the exemption as we got in CA exams, so how we will account for that? So basically we have some simple method that is prescribed under the Ind AS 116, that is on the SLM straight line method. We have to expense the lease rental on the systematic basis in the profit and loss account, that is the each year equal amount. Okay, so that is the all about the exemptions, and I hope so you like it, and thank you very much for watching it.